Hey guys, it's Friday, February 17th at 11 o'clock p.m. and I want to spend a few minutes talking about the latest developments in natgas. So let's start with the tweet here. I put this out this afternoon anticipating a very large trade in UNG and ideally looking for a large trade in KOLD. And the reason that I was looking for a large trade in KOLD is because that is the 2x inverse ETF, and seeing a large trade at a high that we're at now in a leveraged ETF would suggest to me that the institutions are no longer shorting, and they're beginning to close their shorts, or this is them closing their shorts. And the larger the trade, the better. And if you recall, we got a large trade a couple of weeks ago. I was also looking for a large trade in KOLD to signify a low of sorts being put in place. I hoped it would be the low. Certainly didn't turn out that way. But back on February 3rd, we got 3.82 million shares of UNG and 60,000 shares of KOLD. And the KOLD chart looked like this at the time. And the trade in question was ranked number 22, and it was 145K. Oh, excuse me, it was 60K. This 145 is from earlier, so it was 60K. The one we got today was much larger, 37 times average size instead of 5 times average size. So substantially larger. And here's an example of what happens when a very large trade comes in at a high, and this is a pattern that I've discussed many times over, but it applies here again. This is only large in the context of KOLD. 60,000 shares of most ETFs is not really going to raise any eyebrows, but for this one, because it's relatively thin and it doesn't trade very often, and this trade ranked almost in the top 20, it was noteworthy. And when it came in, it suggested to me that they might be closing a short position, which would be good for gas longs. And what happened was immediately we got a move down. We got a little move the next day, it bounced back up, and then a move down. And for the next, I guess, week or so, we had a decent size bounce in UNG and Boyle. And feel free to go back and look at those posts. I'm sure I remember tweeting about it often. But this is just an example of what I look for and what I tend to expect when I see a large trade, particularly a leverage trade, arriving at or near a high. So today this came in, and this was the one that got me all excited. And this is the largest trade in the history of KOLD, which has been trading since 2011. So, 11, 12 years, that's a long time. 434K shares, but this size is measured in dollars. It's not measured in shares. There were certainly other trades in the past where the number of shares traded was larger, but where the dollar amount was lower. So these rankings are always based on dollars. This was $31 million. Now I went and looked, and the second largest trade in the entire history of KOLD was, I think, 8.7 million. So this is 4 times larger, give or take, which is a big jump between the largest and the second largest now. So this other trade that was the second largest had been the largest since 2020. This is a very substantial trade. So, and then with it, we got some UNG as well. We got 1.1 million shares, which if UNG was priced a lot higher, that would really catch my eye more. But it's a respectable trade. Anytime you see 1 million or shares or more in UNG, it's kind of worth paying attention to. So anyway, the two together is a good sign for a reversal, hopefully coming soon. So here's what the KOLD chart looks like, and I also posted this, and you can go look at it if you like, but just to demonstrate how far KOLD has moved just in the last year or so. So December 2022, oh, excuse me, no, I misspoke. Just in the last few months, KOLD has moved 7 times up. It's been a hell of a move. So this here is, in my opinion, almost certainly a sell. I can't say for sure, these trades aren't labeled. You never know 100%, but it would not make any sense to me for a trade of this magnitude, of this rarity, to show up at a high and be anything but a sell. Institutions don't typically buy at highs like this. And it was brought to my attention that it did happen with SVIX a few months ago. And it did happen with QQQ, although not at this steep of a high, but it happens. So there are no guarantees, but probabilities suggest that this is a sell. And that is true even if price continues up a little bit further, because they have to place these trades in areas where they can get a fill. And so sometimes you'll see some overshoot, and I'll talk about that a little bit. So here's natural gas. This is back since the highs over the summer. And I just wanted to point this out because you can see that as we approach the highs, there were 3 large trades up here, and a few weeks were spent distributing. So it took a while for all that inventory to come off before the decline set in. And these trades at the time were quite rare. They were all ranked. They're all $1 million plus, but at $32, $33 a share. This one was 12th. This one was 14th. There's one more here, 54th for the other one. And there are some other smaller ones in there too. But I remember talking about this, and I've talked about this in other videos. This was an area where I was confident they were selling, despite the fact that price did advance just a little bit further, and despite the fact that we did not see an immediate reversal. So selling takes time. So anyway, and one more point on that, the move up to this high was quite large. Natgas was trading at 10-something. It was just a parabolic move over the summer. So naturally it would take time for all that inventory that was accumulated on the way up and traded on the way up and bought on the way up to sell up in here. And that's what they did. And eventually we got this decline. Now down here, you can see activity really start to pick up. These were rare, and the fact that there was 3 up here was rare. There are, I don't know, 12 or so down here that are $1 million plus shares. And this chart is showing everything that's $8 million or greater. So quite a lot. And not every one of these was a buy, probably, although I can't prove it. But the fact that institutions were so active down here suggested to me that they were, that the low was coming. If we zoom in, we can see this is just since January. Got a few big ones up here. Price continued to decline. A whole bunch here in this zone and just the beginning of the month. And then price, finally flattened out a little. And February 3rd was when we got that KOLD trade, and I think this was the trade that coincided with it, this 3.2 million shares. So we got a little bit of a bounce here, and we got a decline and another bounce, small bounces here, and Boyle traded in here a few times. So it suggested that the bulk of the decline was behind us. Then we got this last move here in the last couple of days, and it's really, really just extended so far down. But I wanted to go back and look at what we should expect, and one of the possibilities is the inverse of what happened in the summer. This is natural gas back in August and September, and as we came up into the high, into this 32 zone, we could see these 3 big trades that I just cited on the other page, and then we got this big spike here, which was, at the time, unexpected. But it wouldn't be unexpected for that to happen again. In fact, this might be, this little decline right here that we just endured today might be the inverse of this spike up, or that spike may be coming, or maybe it's not going to happen at all. But I want to account for the fact that just because this big KOLD trade came in, wherever I put it, doesn't mean that you should expect an immediate reversal. It's certainly possible, but it's not, certainly not a guarantee. So this, I want to reiterate, is more of an exit signal for anyone who may have been long cold or short oil or short UNG or short gas futures. This, to me, is an exit signal. It tells me that institutions are likely closing this position here. Now, they don't always close at the very tippy top or the very bottom of the bottom. Sometimes there's some overshoots, so we should not be surprised if we get a little bit of overshoot Sunday night or Monday or Tuesday, and if it takes some time for a reversal to take effect. Now, there's no way to know how much they have to sell. This could be all of it, or they might have a bunch more, like we saw here. I remember thinking, oh gosh, that's it, they're selling. And we got, some chop, and then there was another one the next day, and then there was another one the next day, and I thought, good gracious, when is this thing going to finally turn? And then it spiked up, and I remember thinking, what the heck is going on? Came right back another day or two later, continued. It just would not break down. So this took a long time between the 16th, 17th of August and early September before it finally broke down. So say 2 weeks, 3 weeks, maybe that'll happen this time, because the move up into the summer high was just as strong as the move down has been since then. And then look, when it did break down, came right back up and tested it. So we should be open to the idea that that may happen again, that if this is the low in gas or very, very close to it, and we get a move up, a gap up, or some kind of a bounce or some kind of a rally, it may very well fail. It may fail and come back down and test this zone again before ultimately moving away for good. So there are a few different possibilities that could take place here. This is Boyle from the summer too, and I want to talk about this because there's a pattern that I've noticed that doesn't always happen, but it happens enough that I pay attention to it, which is that whenever an instrument has a leveraged ETF, in this case KOLD and Boyle are leveraged ETFs for UNG. Same with SPXL and UPRO for SPY, or TQQQ and SQQQ for QQQ. The pattern that so often occurs is after a long rally or a steep decline, the leverage will get closed first. And it happens both on both scenarios, whether price is going up or price is going down. Once the leverage is closed, you sometimes see another nominal high or low, and this is an example of this, where Boyle was closed here after the big run up. This is the fourth largest trade in the history of Boyle at $106 a share. And even after this came in, price still proceeded a little bit further, spiked up, consistent with this spike here in UNG. So these leverage ETFs sometimes mark the end of the road, but they don't always mark the end. Sometimes they mark the second to last high or low in a run. So we might get one more nominal high, or we got one more nominal high in Boyle. We might get one more nominal high in KOLD. It might go just a little further. It might gap down on Sunday. It's impossible to know what's going to happen, but I think nevertheless this is a sign that the end is very, very close. And going back to this pattern, once the leverage is closed, once we get that nominal new high, the third step is building a position in the underlying. So in this case, this UNG, if we do get this, if this is the end of the run, or very close to it, then we may need to spend some time down here and let institutions build out their position, and there's no telling how long that can take. I have some mixed feelings about this because I've seen so much inventory down here that I think that this could already be in progress, that this accumulation could be well into the process. So all of this down here could be the beginnings of them buying into weakness. And they could have started up here as high as 12, I don't know. But the amount of activity down here with very, very large trades, the amount of volume we see down here in the profile, the amount of volume we see here, suggests to me that they're very, very, very active. And if they're being very active after such a steep decline, it would be less likely that they're shorting all the way down here than buying. even as price does decline. So I think some degree of accumulation could already be in progress. Maybe they're done, I don't know. And again, it's hard to tell if this is that spike down like we saw, sorry for clicking around, like we saw here with the spike up, or not. We just have to wait and see. But I think it's good news. And then lastly, after, and I'm jumping around a bit, I'm sorry, but after the position in the underlying is built, that's when you might see the reversal. And as far as adding leverage on in the opposite direction, that will usually come after a retrace. So just to review, first they close the leverage, then there's one more nominal high or low, then they start to build a position in the underlying to reverse. Then once they have their cups filled, the reversal begins. And then after the first retrace, when price comes back to test, like we saw in KOLD, wherever it was, oh, I'm sorry, in gas, they came back up for the retrace, and then they take it back down. So that's when we might see BOIL come back on again. And there's no way to know, of course, but that's kind of the pattern that I've noticed. So, to review, we got a very, very large trade on KOLD, larger than anything that's ever traded and larger by a lot. That is meaningful. It came at the high, which is more consistent with selling than buying. So I'm expecting this rally in KOLD or the decline in gas to be over very, very soon. Even if price does advance just a little bit further, even if price meanders and chops up here for a little while, I still think that this is almost certainly a sell and that we should anticipate a reversal sometime soon. But I want to repeat that this is not an entry signal. This is not an invitation to go out and buy BOIL calls for next week and expect some kind of explosion. This is not an invitation to go and put a whole bunch of money into anything. This is an exit signal. This is telling you the end is near, not the next rally is upon us. So, so that's it. We have gas and KOLD and BOIL and some confluence with other methodologies. Anybody who's following Pivot King, you can see that he's had 222 on natgas as a pivot for a little while now, and that hit today. So that is an important target with his methodology. So we have two systems here that are providing a degree of confluence, and so that should be noted. So that's it, guys. If you have questions, send me an email, find me on Twitter, you know the drill. If you like this stuff, subscribe. I'll keep making them for you. Thanks for your time. Bye.